Hey traders, welcome to today's recap. This is Christian from Hertz Tribeca Trade Group, and here is your market recap for Tuesday, April 24th. All right, so we had S&P. We'll start with the S&P. Finished down 1.3%. Q's really where the damage was, down 2.1%. And small caps actually outperformed. They were only down 0.5%, and they actually hung in there for most of the day until we got to kind of the midday sell-off, where really things accelerated to the downside. So what is going on here with this market? Well, we can kind of rehash a little bit, and then I'll give you my perspective. But just to kind of rehash what we saw last week, and this was my feeling. I thought that once we hit this resistance, this downward trend line that I have drawn here, this was, I think, Thursday. I was expecting, or maybe this was Wednesday. I'm sorry, Thursday, Friday, but yeah. So this was Wednesday. My thought was after a nice week, we could possibly chop around a little bit, and I thought that would be pretty good. Just a couple choppy days, and then maybe accelerate to the upside. But clearly, that's not what we've got. We stalled on Wednesday. Thursday we had another day, a down day, and Friday, sir, I think this is Friday. Friday we just kind of crumbled, and we lost the upside momentum completely. And it was one of those days where it's been very symbolic of what we've been seeing, where we start the day down, or sellers come in and we just can't get off the mat. There's no buying. There's a nice video by my colleagues on Twitter. Joe Fahmy put out a nice video this weekend, and I really like what he had to say about there just isn't that institutional buying that's going on. Just the big guys, the big funds are not buying this market. So, you could think of whatever excuse it is. I think we're at complete saturation with this 3% bond move. I think it's probably a good thing at this point that we finally got to the 3%. I think just tired of seeing the headline on financial media every 2 seconds. What happens if we hit 3%? So we hit the 3% today. I don't think that the world is going to end if we hit 3%. Yes, borrowing costs do go up, but it's just a number of other things that has market participants spooked, and they're not buying the dip like they were before. So it's tough to kind of talk about the same things, but until those bigger players come into the market and really start to pick things for bargains. Normally what you would see for the last couple years is on a big red day, the bargain hunters come in, or the buy the dippers, and they really start to look for bargains and things that got brought down unnecessarily, and they start to pick on different things that are down in sympathy with moves, and we're just not seeing that. It just seems like nobody cares, or nobody wants to really go long this market here. The other thing that's kind of just indicative of a bearish market is when you come in the morning and S&P futures are up 30 or 40 basis points, and they just get smacked down immediately on the open. Every day it kind of seems like, okay, well, maybe it's, I said that this was a risk going in, when I talked about this in the trading room this morning. I said, watch out for this market just to get sold off like it does every single time on the open. We started to sell off a little bit prior to the open today. So it was kind of thinking, okay, well, at least we're not coming in at the high of the day. But, it's basically just there are big sellers out there that are taking advantage of any up day in selling. It's not even selling strength. It's just selling a little bit of green and just taking it all the way down. So, the moving average, sorry, not the moving averages. The value areas are really good to trade with. We broke here for the day. This is on the 5-minute bar. We retested. And I even said, watch out. There's a small bounce here. Watch for us to break value, because once we retest and then fail, it's usually pretty ugly. So we could rehash a couple of the other things that went on today. Caterpillar. Of course, part of what the situation here is, I think coming into, go back to the S&P for a minute before we talk about Caterpillar. But I think people were thinking, oh my God, this price action has been really bad. What could really save us? Some positive earnings reports. And I think everybody thinking that, I think it's impossible for every earnings report to come out positive and clean and the expectations are going to be, strong. It just doesn't work that way for all the earnings reports to come out and kind of save us. Usually what happens with any quarter is you get some really good reports, some bad reports, and some kind of, middle reports. But to have the expectations super high is a little bit of a recipe for disaster. And I think that's what we're seeing in a number of names. We'll talk a little bit about Caterpillar, but it's not that unusual for CEOs to kind of sandbag their year. It just shows you that the expectations are too high. Now they put out great numbers, Caterpillar, but as soon as somebody says anything bad, the risk is to the downside because people are expecting too much. So when negative comments come out, it's a bad thing. I mean, even take Google for instance, right? I mean, Google originally, when I saw their numbers last night, I was like, wow, they're really good numbers. I guess when you drill down and looked at the actual numbers, there's people kind of poked hole with the numbers, saying, wow, their expenditures are really creeping up. They are, it seems like they are really trying to play catch up with Amazon and a couple other players in the cloud space, which is causing them to really buckle down and kind of put some investment. That was the take that I got. But bottom line is that the imagine if they would have come out and actually really missed how much of Google down 4% today on a beat. Now again, like I said, there wasn't not everything was positive with their report, but geez, imagine if they actually came out and said something really bad in their report. How much would they be down? 10%, 15%? I don't know, but it just shows you that the expectations are not matching with what the companies are delivering. And again, going back to the institutional buyers, they're taking advantage of any type of bid to exit positions. So where does that leave us? Well, hopefully, I think the market has to still come in more for the expectations for it to kind of wash out. I don't think we're at that point. A couple names that reported today, we'll talk about the semis for a little bit, which, got hit real bad last week and just continued to move down. A lot of red bars here on the SMH, broke the 200-day moving average. A couple names reported after the close, but I'm going to tell you exactly what, you should be looking at every day is not what the initial reaction is here. Let's see where Texas Instruments is. So great, right? I mean, they closed at 98.42. They put in a strong quarter. They're up $5 after hours, but it doesn't really matter. It matters what happens on tomorrow's open. This could also, sellers could come in and take this thing right down. Who knows? That's just the environment that we're living in, and I think you just have to be cognizant of that. Same thing with Crete. Nice quarter, but who's to prevent sellers coming in and just whacking every name down? So we'll see if that takes place, or if some buyers kind of take advantage. The option flow is not really giving us too many signals either. There's a lot of two-way flow. Like if you look at the order flow in SMH today, for example, right? There was a little bit of a call buyer at the end of the day with the May 98s, but it seems like for every aggressive call buyer, there's puts going up as well. It's you can see traded 2.8 times usual volume. But you could take a look here and you could see that there was a decent sized put trade as well that went up. Now this went up at around 11 o'clock. The calls went up a little bit later in the day. But you could see another big put order here too. So there's just not a lot to kind of hang your hat on, because as soon as, a lot of these names where we see the call buyers, there's also put buyers in there as well. A couple bright spots for this market. Let me finish talking about the negative, and then I'll talk about the positives, which there were not. Just looking at other things that some other names that have been really strong, maybe not so much Facebook, but Facebook just dumped down again today. Didn't even get back up to the 200-day moving average. But so we talked about Google. Google's now below the 200-day moving average. Apple is below the 200-day moving average as well. It did take out this VPOC down here. Maybe we'll see a little bit of digestion. Sometimes after that VPOC gets taken out, maybe you see a reversion here, but that's now below the 200-day moving average as well. What's a little bit difficult here is the 200-day moving average in all these charts has been rising. So while this went below the 200-day moving average and reclaimed it, that was at a lower level. 200-day moving average is now what, $5-6 higher than it was here. So it's a higher hurdle. Um, Oh, Teradyne just came out. They missed pretty bad. Shares fall 17%. So that's another semi name. So that might mess that whole theory up about maybe semis getting a bounce tomorrow. But so, going back to Caterpillar for a minute, like I'm jumping around here, but normally what we would see on days like this, just to give you an example of, call buyers coming into Boeing or call buyers coming into, another industrial name that had nothing to do with Caterpillar, but we're just not really seeing that. So I think this has to continue to wash through, and a couple bright spots I think were small caps today. Now they finished down. They finished. They could not hold on to today's gains, but at one point these were up about 60 basis points. I think for a good couple hours throughout the session, till about till about 11:30. This hung on pretty well. Also, the regional banks today. That's a nice little play on. If you think rates are going to continue to go higher, you could see that the regional banking ETF actually finished in the green, and that was probably where the most interesting option activity was today. We started to see some of those banking names that got beaten up. We did see some call buyers come in the morning, but they kind of vanished. Once there's a little bit of volatility, they don't they go bye-bye. But we did see a little bit of call buying in Citigroup. Again, not huge stuff. The regional bank, speaking of the regional banking ETF, that was probably one of the best signals, I would say. They bought some May 63 calls today. Against the open interest was 2,600, but you could see that they traded a lot more. 7,000 and 4,000. So I'll stop here. I could go on about some other names, but bottom line is, you can't really buy the dip. I know it's tempting a lot of days. That's normally what I would be doing, is at the end of the day kind of looking through and trying to bargain hunt a little bit. But if you're the only, if you and just, other retail traders are out there buying the dip, that's not going to do it. So, bottom line is, I think you just have to kind of be patient and not take too much risk. The smaller I trade, the better, and I say this a lot in the trading room, like, hey, I'm only going to trade very lightly here. And the lighter I trade, the better it's been. All right, so that's today's recap, and it is what it is. Just have to kind of get through this and wait until those buyers come back. And if not, just kind of stay out of the market a bit and let it wash through. All right, guys, thanks for watching the video. Have a great night. See you tomorrow.